There we have it, a rock-solid opening this morning, 70 points higher now on the Nifty.
The Nifty is inching towards 19,500, not made its way there just yet.
120 points higher on the Nifty, so looking good there. The mid-cap side of things are actually outperforming.
So both the Nifty Bank, the Nifty Financial Services Index, both of them have moved lower. This is an expiry-related move that we're seeing out there. Earlier on in the trading session, the Nifty was comfortably holding above the 19,500 odd mark.
Well, that was the day so far. Hello and welcome to Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia, and these are all the top headlines for the day. The Sensex and the Nifty end in the green, even as the bank stocks see a sell-off in late trade. Mid-caps outperform. The blue chips Reliance Industries continues to rally, ending at a 52-week high. Vedanta and Foxconn part ways. Both will pursue independent chip initiatives, says the government. Minister for State for Electronics and IT, Rajiv Chandrasekhar, adds that Vedanta has submitted a fab proposal with a global semiconductor major. The street frets over the capex needs and resources. Car trade jumps after it inks a deal to buy OLX's auto business for 537 crore rupees. Even Tata Communications gains on increasing its stake from 58% to 100% in Oasis Smart SIM. And defense stocks rally after proposals to buy 26 Rafale jets and 3 Scorpem submarines get the green light. Both deals could be announced during Prime Minister Modi's visit to France later this week. And a string of warnings by global chemical players flagging weak demand, sharp inventory cuts and falling prices paint a bleak picture. Chemicals and agrochemical stocks slipped today. Well, straight to the market action now. The Sensex gained over 270 points today. The Nifty gained over 80 points. So it was a good day. The buy-on-dip situation played out. This despite a sharp fall in banking stocks in the last hour of trade. The Nifty Bank Index lost over 100 points today. On the other hand, the mid-caps outperformed the blue chips, with the index gaining over 300 points. Surbhi is here with the day's market action. Surbhi.
Well, not a bad day for the bulls really on the street, though some will quibble and argue that the Nifty is failing to close above certain critical levels. But anyway, the sentiment is cautiously optimistic on the street. There's no taking away from that. We did get about a 0.4% gain on the Nifty today. And yes, the index second day running failed to close above the 19,500 mark. Actually, that zone, 19,500 to about 19,520, it's becoming a bit of a near-term hurdle. We need to watch it carefully to see if the index can go above that hump. What led from the front today? 3 key sectors: auto, FMCG and pharma. And that was very evident in names like Sun Pharma, Eicher Motors revved up, Maruti, and you had some more names like Titan towards the end of the trade, Tata Consumer, ITC. These were names from the consumer space. The problem area for the market was financials, and towards the end, the financial services index, the Nifty Financial Services, that kind of caved in. The Bank Nifty was down at the day's low as well, and that's why the Nifty was a little subdued. The action, however, is really in mid-caps. That's where the activity has been hectic. The mid-cap index put on about 0.8% today, and defense was a solid, red-hot space in the market. You look at stocks like Mazgaon, up 10%. Look at Paras Defense. Look at names like BEL. You look at the recent listing, Idea Forge, which was skyrocketing up about 8% higher. The maker of drones is what I'm talking about. So that's one very, very hot space in the market. And the other is EMS, or Electronic Manufacturing Services. The recent listing, just yesterday, we saw that big pop on Scient DLM, 50% gain on listing. Today, the stock put on another 20%. That's the extent of momentum in the market. So mid-caps doing well. Nifty, we have to wait and watch. We get into some very important events come tomorrow. We have 2 big earnings, TCS and HCL Technologies, and we will get the CPI print from the US, which will set the tone for global markets. So we should get some more clarity in the middle of the week.
All right, thanks a lot, Surbhi, for that. So indeed, it was a decent market, and the market trend has been on an up move. It hasn't really stopped, barring a few days here and there. So let's get you some market opinion as well. Rahul Chadda of Mirae Asset Global Investments is expecting the markets to slow down a bit as domestic liquidity gets tighter. He also prefers large private sector banks, but is cautious on the real estate sector. Take a look.
What we're going to also see is domestic liquidity get tight over the next couple of quarters. Already the differential between dollar loans and local domestic rupee loans is a record low, and we see more corporates kind of repaying their overseas loans. So what we are expecting is in the next couple of quarters, as domestic liquidity gets tight, things would slow down. I mean, the price momentum has been slightly on the excessive side, so one would be tempted to take some money off the table here. the large cap space. We would like the large private sector banks. To be fair, they've not participated in the rally. Even the SOE banks like SBI, etc., they haven't really participated much in the rally. So I think that is an interesting space. These are names with good CASA franchises. Where one would take some money off the table is NBFCs. We've seen these NBFCs run very hard on this notion of peaking inflation, on the strong disbursement some of them declared. I think one would be tempted to take some money off the table there. Real estate is a space we've liked for last 3-4 years. I mean, these stocks have been multi-baggers for us. But again, with this thesis of tightening liquidity, slowing growth, I think temporarily one can take some money off the table in that space also.
All right, temporarily one can take money off the table. That may be the prudent thing to do. But let's move on to the second headline now. Vedanta shed close to 2% today after Foxconn withdrew from its almost $20 billion semiconductor joint venture with the company. In a statement, Foxconn said that its withdrawal is not a negative and it remains committed to India. Nigel joins in with the details. Nigel, what does all of this mean for Vedanta?
Well, that's right. Vedanta, they said over the weekend that they're going to be pulling in the semiconductor business into their listed entity. Now, the problem that they're facing is Foxconn. They have said that they'll not move forward with the joint venture, and they're working to remove the Foxconn name as well from that venture that they had earlier got into with Vedanta Limited. Well, I wrote to Vedanta Limited, they've responded, and they say that they're very committed to this project, that's a semiconductor fab project, and they've lined up some other partners for this venture itself. The key points that we're looking at from here on will be, what is the total capex that they're looking at? Remember, in the past, they've said it's close to around 19 billion to around 20 billion. How do they fund this is going to be very, very important. Who's the new partner that's coming in there? And how does this change the leverage on the books? So we'll be waiting for that. And, in the coming days, I'm guessing we'll hear some sort of an announcement. But nonetheless, Foxconn pulling out of this JV is read as a bit of a negative. Back to you.
All right, well, the third headline today, the Tata Group is all set to become the first Indian company to manufacture iPhones in India. According to a Bloomberg report, the conglomerate is in talks with Apple to acquire their supplier Wistron's factory in Karnataka. The deal is expected to close by August. It would be the first time that an Indian company would be assembling iPhones. CNBC-TV18 has independently verified that the Tatas have been carrying out their due diligence for a while now. Sources have also told CNBC-TV18 that some issues pertaining to the deal are being ironed out. The potential value of the deal is more than $600 million. Well, speaking about the Tata Group, Tata Communications surged over 6% today. The company plans to acquire the remaining stake in Oasis Smart SIM Europe SAS. Remember, Tata Communications had picked up 58% stake in OSSE way back in 2020. Rima joins in to get us up to speed with this deal. Rima.
Thank you very much for that. Tata Communications saw a pretty big surge in trade. This is after the board announced that they will be acquiring the remaining ownership in a company called Oasis Smart SIM Europe. The company had acquired a 58% stake in Oasis SIM in 2020. They had a 58% stake, so it was already a subsidiary. And now yesterday, the company has said that they want to acquire the balance stake and bring their holding up to 100%. And the company will be paying about $12 million. That's about 100 crore for acquiring the balance stake. Remember, Tata Communications has this aspiration of improving their data revenues quite handsomely. So I guess this, all the M&As that the company has been doing fuels the aspiration to grow their digital business and their data revenues. The stock closed up with considerable strength and good volumes.
Right, thanks a lot, Rima, for that. Well, staying with acquisitions, Cartrade Tech jumped a massive 15.5% today on the back of an acquisition that Cartrade has signed up for. In fact, Cartrade will be acquiring OLX India's auto business for 537 crores, and this is an all-cash consideration, so they will be using the cash on their books to acquire this company. Now, Sobex Auto, which is OLX India's auto business, runs an automotive digital platform as well as a classified internet business, so it's pretty much synergistic with Cartrade's own business at the moment. And even the financials of Sobex, have looked very good over the last 3 years. The turnover that Sobex reported way back in FY20 was 550 crores, and now it's almost at 1110 crores. So the street definitely like that. But let's shift focus to the earnings season. It kicks off tomorrow with TCS and HCL Tech coming out with numbers. It's likely to be driven this time around by banking, financial services, insurance and auto. Meanwhile, metals are expected to underperform. Nimesh is joining in with the key expectations from this season's earnings. Nimesh.
Hi, Sonia. So as rightly pointed out, markets are at record levels, and of course, a lot of stocks have done really well. So a lot of the good news seems to be pricing in terms of the earnings as well. So let's look at the overall picture first. For quarter one, what is the aggregate that one needs to watch out for? From a net profit point of view, for Sensex, the growth is expected to be 18% YOY. For Nifty, the growth is expected to be 25% YOY. But on quarter-on-quarter basis, it will see a decline of close to 8% both for Sensex and for Nifty. So that's the aggregate number on the earnings. Now look at the individual sectors. I've just looked at a lot of research reports and identified the individual stocks which will do well. But before that, the sectors which are actually likely to do well in terms of overall growth is going to be the domestic cyclicals, the likes of banking and financial services and autos. They are likely to do well, but the drag is going to come largely from the metal names as well as the cement stocks. These are overall on an overall basis, they are likely to drag. Now let's look at the individual sectors which are likely to do well in quarter one. First, look at the OMCs. The consensus is that most of the OMCs will see a bumper quarter this quarter, and that's largely because of the elevated market margin. So look out for OMCs; they'll report very well. The second sector which will do really good is the banking. Within banking, the overall consensus is that the NIMs can compress between 10 to 20 basis points quarter on quarter for most of the banks. So that's the overall on banking. Now coming to the autos, this is another sector which is going to report strong numbers. So most of them are expecting a strong quarter, and there's going to be a margin expansion as well across the auto names as well. Now look at the cement sector. Within cement, the volume growth is going to be quite strong, but the margins are expected to be flat across all the cement names. So that's for cement. On consumer durables, it's going to be largely a lackluster quarter across most of the companies. That's the overall feedback. The consumer staples would be interesting because there is a mixed bag. Mid-single digit volume growth, but high single digit growth in terms of value as well. So that's the kind of consumer staples which can report the numbers. The other important companies sectors to track would be NBFCs. Like banks, even for NBFCs, there could be a margin compression across most of the companies, and lower NIM growth is something which a lot of analysts will be tracking very closely. Gas utilities will be another big sector to track. I spoke about OMCs doing really good this quarter. Even that's the expectation for the gas companies as well, that they are likely to report good numbers on a quarter-on-quarter basis. For metals, there's going to be a contraction in terms of the margins, especially for the steel companies. The street is expecting 2,000 rupees per ton contraction in terms of margins for quarter-on-quarter basis for most of the steel names. The big disappointment, so to speak, for quarter one is going to come from the chemical stocks, chemical sector companies. Most of the specialty chemical companies are likely to report very weak numbers on the back of destocking. So that's one sector which can surprise negatively. And technology, Rima extensively spoke about it. I'll just say one line. Seasonally, it's a strong quarter for most of the IT names, but it's going to be very divided because a lot of companies might surprise on the positive as well. So that's the overall picture on what individual sectors can do in terms of quarter one earnings. Now, I was just looking at some brokerage notes as well. Citi has put out an interesting note where they've mentioned some individual names as well, which is something to watch out for. In terms of positive surprises, according to the Citi note, watch out for few names, the likes of ICICI Bank. That's likely to report a very strong quarter-on-quarter numbers among all the private banks. So ICICI Bank is something which is going to positively surprise as per the Citi note. There are a couple of other names as well which are likely to positively surprise in quarter one, which includes ICICI Pru Life, VNB margins, and potential for an upbeat in terms of medium-term stance as well. So even that's going to be a big surprise as per the Citi note. The third interesting stock would be Nykaa. Among the the recent listings names, this is one stock which is likely to surprise on the positive side because the EBITDA losses are going to decline much more than what the street is penciling in. So that's the positive surprise which can come in. Look at some negative surprises as well which Citi has put out. Within banking, Axis Bank could be one stock which can actually surprise on the negative side on the back of moderation in terms of margins, and the growth may lag the peers as well. The other stock which can disappoint, according to the Citi notes, is Tata Steel. Even in Tata Steel, I spoke broadly about steel, but for Tata Steel, the weaker than expected European performance can actually dent the overall performance for Tata Steel. And the third stock which Citi has a negative view in terms of earnings is SBI Life. While all the life stocks have done well, for SBI Life, the high base of non-par and lackluster retail protection is going to impact the quarter one for SBI Life. So that's the overall picture. The markets have done really well. A lot of stocks have priced in big positives. So quarter one is going to be quite exciting and quite interesting as well as far as earnings are concerned.
All right. Thanks a lot, Nimesh, for that. Let's slip into a quick break, but stay tuned. We'll be back with all the other headlines in just a bit. Welcome back to Markets Today on CNBC-TV18. The fourth headline that we're tracking this evening is on defense stocks. Defense stocks were firing on all cylinders today. The Defense Procurement Board has approved a proposal to purchase 26 Rafale fighter jets for the Indian Navy. The deal could be announced during Prime Minister Modi's visit to France later this week. Parikshit Luthra joins us now. Parikshit, what else is on the anvil?
Well, 5 to 6 big-ticket defense items on the anvil when Prime Minister Modi meets President Macron in France this week on the 13th and 14th. Now, these deals have been in the works for some time. One, of course, is the deal for making 3 Scorpene submarines at Mazagon Dock Limited. This is a continuation of an earlier program because Mazagon Docks have manufactured Scorpene submarines in the past as well. Then you have the deal for the 26 Rafale marine aircraft for the Indian Navy. Now, France has been pitching this. They want us to seal this deal as soon as possible. This has received approval from the Defense Procurement Board, and both these deals, that is for the fighter aircraft and the submarine deal, both will have to be now approved by the Defense Acquisition Council on the 13th of July, post which both leaders, Prime Minister Modi and President Macron, will take a final call on it. Apart from that, there is a deal in the works for co-development of jet engines for India's fighter jet program. This is between DRDO and the French company Safran. There is also a proposal for joint development of helicopter engines. That, of course, will be important as well. And companies like Thales of France have also shown interest in defense sector. So net-net, 5 to 6 big announcements expected this week.
Okay, thanks a lot for that, Parikshit. The street will await these announcements, and a lot of these stocks have rallied quite a bit. Staying with defense deals, Premier Explosives gained a whopping 20% on the back of a deal win. The company has bagged orders worth over 550 crore rupees from the Ministry of Defense. Surbi Sutaria joins in with more. Surbi.
Thanks so much for that. So as you said, they won a total order of 550 odd crores from Defense Ministry. But apart from that, on 6th July, they won another order worth 86 crores from the Defense Ministry itself. And 9th June, they won another order worth 57 crores. So they've won a total of 700 crore worth of orders in the month of June and July. Their order book as of 31st March 2023 was 520 odd crores, out of which 58% comes from the defense segment, 17% comes from the explosive segment, and 25% from the services segment. But when you look at their financials, their revenue is only 200 crores or 200 odd crores for FY23. They have a margin of 16%, which is 26 odd crores, and margin of 13% in FY23 versus 11%. So if you add the 700 odd worth of orders to the 500 orders that they had at the end of 31st March, they have a total order book of 1200 crores now, which is 6 times the sales. So what we'll have to watch out for is the execution levels for this company.
All right, thanks a lot for that. Well, the fifth headline today, chemical and agrochemical stocks slipped. Global chemical players have reported a weak guidance for the second quarter, signaling weak demand, sharp inventory cuts and falling prices. Sonal Bhutra joins in with key details on all that's been happening in the chemical space. Sonal.
Thank you so much for that. Well, agrochemical companies in our own country, they'll be in focus. The listed stocks like UPL, Sumitomo and Rallis as well, and other specialty chemical players as well. And that is because global players like FMC and Evonik, they have gone ahead and issued profit warnings for quarter 2. FMC says that there has been abrupt and unprecedented reduction in channel inventory by customers in North America, Latin America, which are the major agrochemical markets. This has materially impacted the volumes in the quarter, and they've cut their revenue guidance as well to $1 billion versus $1.48 billion earlier. So that's a big cut that they are seeing. Even Evonik, which is a specialty chemicals company, says that recovery has been slower than what they had anticipated earlier. There's persistently weak demand as well, and recovery has turned out to be much weaker than what they had expected in the month of from the month of April and May. Centrum on the back of this says that Indian chemical companies will experience export challenge for the entire financial year, that is 2024, and this will impact earnings materially as well. Now, recently there have been a lot of profit warnings from global chemical companies. Clariant, in fact, said they are cutting their revenue guidance or looking at a revenue cut of 17% on a YOY basis. Demand continues to be impacted by key markets and in both their care chemicals and additives business. Lanxess went on to say that nearly all industry markets are impacted by weak demand and industry destocking, and profit warning could be somewhere similar to Lehman crisis as well. So that's a big statement that they made. All in also said the challenging demand environment seen both in VCM and epoxy resin, which is their two major products. And you spoke about VAM as well. So there has been continuously a decline in pricing that we've seen across commodity chemicals that could impact the chemical industry in India as well.
Okay, Sonal, tell us about PCBL. That rallied over 3% after it completed the first phase of capacity expansion at Mundra in Gujarat. Tell us more about this plant.
Well, it is a new segment that the company is getting into. Remember, PCBL is a carbon black manufacturer which is used in tires, and here they say they are getting into specialty chemicals, and that's where they will see newer prospects of revenue growth as well. The stock is at a record high on the back of this. They have announced commissioning of the first phase of their specialty chemicals capacity expansion at Mundra in Gujarat. The initial capacity will be 20,000 metric tons per annum, and the total capacity here will be 40,000 metric tons per annum. The company says they will be looking at or catering to the existing customers, but they are also looking at newer avenues of getting clients. So definitely this is somewhere they will get better revenues and margins, and that's why the street is excited.
All right, thanks a lot for that, Sonal. Well, let's shift focus now to some brokerage reports. Hero MotoCorp was under pressure today after BofA Securities downgraded Hero MotoCorp to an underperform rating. In fact, they have a target price of 32.50 on Hero MotoCorp, which is still higher than the current market price. But what BofA Securities says now is that in the entire two-wheeler space, the preference lies in Eicher Motors because the run-up in Eicher Motors has not been as much as its peers. On Hero Moto, they say that there was a CEO change, and the optimism of the CEO change has been captured into the stock price. They also talk about how the valuations at 17.1 times are now not cheap anymore, given the kind of competition that this entire space is seeing. So there is rising competition in the entry executive bike segment. There are new age companies in the electric vehicle space that are competing with Hero MotoCorp, and all this does not bode well for growth, and hence there is no valuation upside as well. In fact, if you look at the peer comparison, right, Hero MotoCorp has underperformed its peers like Bajaj Auto and TVS Motor this year. However, it has outperformed peers like Eicher Motors. The reason for underperformance compared to Bajaj Autos also because of Bajaj Autos strong move in the premium segment. The two new launches, Speed 400 and Scrambler 400, have seen 13,000 bookings in less than 5 days of the India launch. This has been confirmed by the management, and hence there is more pressure on Hero MotoCorp to perform. So, of course, you have this entire domestic two-wheeler space, the premium end, that's seeing a lot of competition, and Hero MotoCorp is struggling because of that. But moving on, Keval Kiran Clothing gained 8% on the back of a bullish note from Antique Stockbroking. The firm said that the company has built a robust business model. Surbi Sutaria joins in with the details. Surbi.
Thanks so much for that. So Antique has initiated coverage on Keval Kiran Clothing. As you said, they have a target price of 805 rupees, which is close to 40% upside from the current levels. Now, Keval Kiran is a prominent player in the menswear segment. They have 60% of their revenues coming from the Killer brand, which is the jeans brand. Now, Antique says that they've built a robust business model with consistent double-digit margins. The company has a healthy balance sheet and strong return ratios, and majorly driven by a fully integrated value chain, that is right from designing to retailing, an asset-light store expansion model, and restrictive excessive discounts. The company also aims to grow its exclusive business outlets footprint at 20% compounded growth rate for the next 2 years versus just 11% in the last 5 years. They expect a revenue, EBITDA and a PAT growth of nearly 18 to 22% in the next 2 years. On valuation, Antique says that they expect a significant re-rating. Currently, the stock is trading at 19 times FY25 PE, but Antique is valuing them at 28 times FY25 PE based on the fact that the company will grow by category expansion and also strong retail expansion.
All right, Surbi, thanks a lot for that. With that, it is a wrap on this edition of Markets Today. Thanks a lot for watching, but we leave you with some market opinion coming in from Gautam Dugard, who we spoke to earlier in the day. Have a great evening.
Sectors that are doing well are the same that we have seen for last 3 quarters, which is financials and autos, which is continuing the trend that we have seen starting from third quarter of FY23. Consumer is also expected to do well with about a 20% growth, largely a reflection of margin expansion, and then oil and gas, excluding the OMCs, which are showing a big decline. So metals, we are expecting the profits to halve on a YOY basis, and oil and gas also about 20% decline ex of OMCs. So that's how the overall picture looks like. There is going to be a margin expansion in many sectors, and I think this trend will perpetuate as we move forward in the rest of the quarters in FY24. Overall, we are still talking about a 20% kind of a growth in Nifty earnings, 16% excluding commodities for the full year FY24.